We are going to go ahead and get started on today's webinar, which is operating in fintech, blockchain, or crypto in 2026, what every founder needs to know before it's too late. And I'll go ahead and we'll do quick introductions. I'll talk a little bit about the firm, and then we can get into the webinar. So I'm Josh Radbod. I'm a partner at Cogent Law. I lead the firm's fintech, crypto, and banking practice. I've been working with fintechs and crypto-related companies for almost 10 years now. It's a very large part of the firm's business and also my business as well. Outside of that, I also work with cannabis-related businesses as well. And outside of being a partner at Cogent, I run banking and compliance conferences for high-risk industries. As you can imagine, the cannabis industry and the crypto industry. My cannabis event is called the PBC Conference, Payments, Banking, and Compliance in the Cannabis Industry. And our crypto event is called the CBC Summit, Crypto Banking, Compliance, and Stablecoin Summit. Our crypto event is held in DC, and we have a sister event hosted in London, which covers UK and Europe. Thank you so much, and I'll pass it over to Allison.
Hi, my name is Allison Maffett. I'm also a partner at Cogent Law Group and work closely with Josh regularly. We do a lot in the fintech and blockchain spaces. And this includes working with startups, it includes navigating regulatory hurdles, both federally and in for different states. So that's very high level. And up next, Jose.
Hi, my name is José Miller, so I'm a Portuguese qualified attorney. I'm also a partner at Cogent Law. I'm working mostly on the fintech, crypto, and blockchain space. I have a past into being general counsel, head of legal. I was also deputy to CEO at companies like Zoop, like Banks Group, and Unlimit. And throughout my career, I have some experience in these sectors, mostly deep experience in MiCA legislation, EMI licensing, stablecoin structures, and also cross-border merger and acquisition. So if you're looking to expand your businesses into Europe, I'm here to assist you, of course. We'll be glad to do it. So that's it on my side.
Excellent. Thank you so much. And Jose, you also work in the UK as well, right?
Yes, exactly. In the UK as well, UK and European Union.
Excellent. Thank you so much. So, quick background on Cogent Law. So, Cogent Law actually got into the crypto industry all the way back in 2014. We were one of the pioneering law firms here in the US to start working with the industry. So, we work with everything from over-the-counter trading desks, large crypto exchanges, custodial wallets, NFT platforms and projects, Bitcoin ATM companies, mining companies, companies that are issuing a stable coin, or an exchange or other that wants to be selling stable coins, cross-border payments. We work with a lot of companies that are either moving fiat cross-border or crypto cross-border or stable coin sandwiches, which many of you probably listening to this call are doing one of those things. So you name it, we've done it. And we've been doing this for quite some time. So we have a very good team covering both the US and now UK and Europe with Jose. So today's presentation, we're going to talk through, from the lawyer's perspective and try to give you a perspective from the startup side as well on, hey, you think you're a fintech or you're going to be a fintech and you want to start operating either in the US or in the UK and Europe. What do you need to know? What are the next steps? What are some of the issues that you're going to be presented with? What are some of the most important documents and flows that you'll need to prepare and work through with counsel and others? So, yeah, that's the background on us, and that's what we're going to talk about today. Raphael, do we have another slide or do we just jump into it now? Okay, perfect. We're going to jump in. So, like I said, Alice and I will talk about the US side, and then Jose can cover the European side and the UK side. Um, the way that I like to do this, and as if we're having a call with a client, for example, the first thing we like to ask and figure out is, hey, what services are you providing, right? Or what services you're planning to provide here in the US? And then the next question is, where are you planning to provide those services? Is it internationally? Is it solely domestically in the US? And in what jurisdictions within the US are you going to be providing those services? All of these questions play an impact on how you're going to be regulated here in the US. So let's say hypothetically we get answers to all of these questions and we have a kind of an understanding of where you're going to be providing services and what services you're going to be providing. The next question is, how is money and or crypto going to flow through your business? Who's going to be custodying fiat or crypto in this business? And who are the touch points on either end of the transaction that are going to be involved in this business? So, for the folks that are already in crypto or fintech, are familiar with money transmission and how things work, the document I'm kind of referencing right now is called your flow of funds. Okay. Allison, you can chime in here in a second, but this is the most important document from a regulatory perspective from our side on what impacts those are going to have on where you're either going to need a license or where you can avoid licensure. Allison, maybe you can chime in, say a few words on the flow of funds, the process, and then after this, we could talk about, how we analyze exemptions and all that good stuff.
Yeah, as Josh said, the flow of funds is it's vital for us to understand what you're doing and for also a company to express to regulators, to banks, to any party that you're going to interact with how the money moves. And that's what determines if it's money transmission. And so in the US, that's the key threshold. Is it money transmission or not? And your flow of funds is it's what guides that. What we like to do with clients is really go through, make sure the client understands the flow of funds, make sure we understand it, and that we can present it to a third party who's coming in cold and they can understand it. With that, there can be adjustments because as a company understands what the product is a little differently or the market changes, the adjustments can happen. So that's where we really love open communication and want to work with clients on figuring out the best flow of funds.
Excellent, excellent points, Allison. And yeah, when we onboard a client, one of our first calls is to kind of have a war room session on, what they believe they're doing, which sometimes can be completely different from what they are actually doing from a legal perspective and from a money movement perspective. So, your flow of funds is a very, very important document. Okay. So, let's say we have that call hypothetically, we have the client's flow of funds. What's next at this point, right? So, from our perspective, from the lawyer's perspective, it's we need to analyze where we're likely either going to need state money transmitter licenses, and again, depending on the flow, whether you need a federal money service business license. But at a very high level, if you're going to be moving money in and out of the United States or in between states or exchanging one form of currency for another, you're likely going to be a federal money service business. Which, once you become a federal money service business, there are a whole bunch of rules through something called the Bank Secrecy Act that you need to comply with, which we can have a longer conversation here soon about compliance and how things potentially differ in UK and Europe versus the US, and how a lot of things are actually very similar as well. Um, but then outside of that, we need to understand, hey, where are you going to need state money transmitter licenses, right? So from our perspective, and what Allison and I always like to communicate to clients is, getting money transmitter licenses in every single state or any state for that matter is A, not inexpensive, and B, it is time consuming, right? So, what we like to do with clients is first do something called a 50 state memorandum, which really analyzes the client's flow of funds through each state's money transmitter act. And this takes a couple weeks at least to get done, especially if the client has multiple service offerings. But at the end of this analysis, this memorandum, we have an understanding of which states likely will require a license for the client's services and which states likely will not require a license, right? So once you have this analysis, this memorandum done, it essentially can act as a regulatory roadmap for the company moving forward. Now, there's many other things that we like to recommend thereafter. Once you get this done, potentially sending no action letters to states where you're planning to not issue a license or acquire a license or secure a license. But this can save you a large amount of money and time by avoiding securing money transmitter licenses through the states. This can be helpful, obviously, from a business perspective because you can get started potentially immediately. Obviously, there's AML KYC and terms of service privacy. There's all these corporate documents that you still need to make sure you have and it get taken care of. But those things take significantly less time than getting a money transmitter license. And Allison, maybe you could talk about some of the timing that it takes to, get one license
Yeah.
versus, 50 plus. Yeah.
And as Josh was just saying, it really depends on the flow of funds and the complexity of the structure of the company. If it's pretty straightforward and you have the policies in place and the financials in place and the company structure stays consistent and the leadership changes don't occur and it's a relatively straightforward process. Where things can get a little more complicated is if there are changes during the application process and the states can they're pretty understanding. They're going to work with you, but it's got to be clear. And so especially with something like the flow of funds, we want as much clarity as possible when we start the process. And that will help states understand the goals. You want to be upfront if you're just using fiat, if you're potentially going to change to add crypto, because they look at it differently. But you want to be as clear as possible and as straightforward. And it, if there's already an audited financial in place, if there's relationship with the bank, the banking relationship is another area in the fintech space where we see a lot of challenges. As you all know, the banking space has changed pretty dramatically in the last 4 years. Um, and so we want to start that process as early as possible because it can be a real holdup. Oh, you're on mute.
Thank you. Sorry, I've done at least one Zoom call in my life, so somehow I still do this. So agree 100%, Allison. Thank you so much. And let's talk about the bank account here in a second too. But so all the things Allison said are spot on for actually applying and getting a license, right? And the timeline it actually takes. From our perspective, we can get a large majority of licenses within the first 3 to 6 months. Okay. So, in best case scenario, we can get a large majority of licenses within 3 to 6 months. Best case scenario. Worst case scenario, it could take 9 months or more if a company's not organized, they have changes, they don't have audited financials, they don't have a bank account, again, which we're going to talk about here in a second. So, having that analysis done up front to see, hey, where do we actually even need a license? Can be the difference between waiting 3, 6, 9, or more months versus starting to provide services couple weeks, 3 weeks, once you get all your corporate docs in place. So I wanted to make that really clear. That's something that we like to do. I'm sure other firms like to do the same thing, but clients have gone through this process with us. They really, really appreciate this, both from hey, we saved a bunch of money on licenses, but also we were able to start offering services almost immediately. Okay. So glad we talked about that. Next thing I want to talk about is banking. Okay. And how banking ties into your flow of funds. Okay. So if you're a money service business, money transmitter, there's different types of accounts that you can get at depository financial institutions here in the US. At a high level, if you're a crypto related company and you're trying to get an account, regardless of the type, at any institution in the US, it is still difficult. Period. End of story. It is less difficult than it was 2 years ago, 3 years ago. But I started an entire conference solely on this issue because of how difficult it actually is. Okay. So let's talk about the types of accounts now. Okay. Let's call one the for the benefit of account. That account is significantly more difficult to get than what we could call a traditional money service business account. And a couple of the differences here that are really important to know for an FBO account, the bank is essentially taking on some liability for the transactions that are happening in those accounts. And your clients will have their own subledger name on the account. So they will actually have an account at the institution, subledger. Okay. Now, the other model, the traditional money service business account, the bank is essentially saying, hey, we approve money service business activity through this account, but you're liable for all the transactions within this account. You can subledger names and whatnot, but the funds in this account are owned and essentially controlled by you. Okay, you as in the company, right? So, couple reasons why this matters from a money transmitter perspective. The account model can potentially avoid money transmitter licenses. I'm not flat out saying that here, but that's analysis that we could do for you and explore for you. The traditional MSB account, you will likely need money transmitter licenses, obviously, depending on the flow and all of that, which we talked about. But there's some very key differences there. Okay. Now, getting that FBO account could take 6 months, 12 months, or more. We have clients right now, a dozen, that have been trying to get an FBO account at institutions we're probably all familiar with for 6 months, 9 months, 12 months. These are reputable companies, some VC-backed companies, some companies that have been operating for 5, 6, 7 years. So this is not a joke, right? This is the reality. And if anybody tells you otherwise, they're likely either don't know what's going on or don't have the relationships with these clients or institutions. So, Allison, let me know if you have any comments there.
No, you're spot on. Just the process for, and this fits in with the same regulatory process. To get a bank account, you have to have everything laid out properly. The bank wants to ensure that the compliance is in place. They want to ensure that they understand the flow of funds and they understand how the company will function. And so it's got to be written clearly on paper. So it is a good hurdle to reach because the more challenging states are going to look at this detail and really scrutinize everything. And so by taking the time to get the bank account that your company needs, you will be better placed for the regulatory process.
Yeah, excellent, excellent points. And sometimes you need to move forward with a specific type of account just to be able to start operating and also start applying for licenses. Because if you just sit around and wait for an FBO, you might be waiting a year, maybe more. Um, so sometimes you need to go path A, and then when the door to path B opens, great, open it, run through it, get the account. And if you need to switch over flows, or however you're planning to structure it, which we can help you with. But in terms of, hey, how do I start operating now legally? You may have to go one path first and then the other once that door opens. Jose, is there, and I know that this is happening too, but there's banking issues in the UK and Europe as well that you see, right?
Yeah, definitely. So at the moment, you see, on one side, you have in the UK, which is obviously now from some years, separate from the European Union in terms of on a regulatory perspective. You have on the UK, you have the FCA in which you have to apply and to register for a license there. And in the European Union, there's all this new regulatory landscape basically, which basically impose on you certain conditions, even though it is, all concentrated into one piece of legislation in which you have to follow. But you have these mandatory licenses in which you can't obviously escape. But on the other hand, and I will be talking this further, it will give you obviously credibility and transparency for your business, which is pretty good at the moment, considering that obviously it is an issue at the current business environment. I would say, credibility with obviously build trust among investors, among users, which is very important among customers. And so, on one hand, you have the UK with a strong regulator, which is the FCA, very wide known for its credibility, its reputation. And on the other hand, you have Europe, which every single regulator on a local basis, obviously supervising all the processes. But you have one piece of legislation that commands all, which is, we all know that we are talking about MiCA in terms of crypto licenses. And so I think that is the advantages both from the UK perspective and from the European Union perspective is the fact that we have now on one side one piece of legislation that can cover all, and on the other hand you have a strong and reputable regulator, and obviously this legislation which is, I think, and in my view, very strong in the UK and gives that credibility that the business environment requires, especially on the crypto and blockchain and fintech side, of course.
Excellent. Thank you so much for that, Jose. And like you mentioned, I know you're going to dive into those things deeper here in a minute. But just like here in the US, I know in Europe and the UK, you must have a bank account in order to get these licenses, right? So the requirement there is the same. And we know this as well, which is also why I launched CBC Summit Europe, which is the amount of banks that are actually working with crypto related businesses in the Europe, actually in Europe and in UK, is also very limited. It's a small number of institutions. And the same thing is happening here, right? And we're obviously trying to help that through the event and through our work at the firm. But this is something that is an issue not just here in the US, but also in Europe and UK as well. So, okay, so in terms of going through the decision tree, excuse me, working with a client, figuring out what services they're going to offer, where they're going to offer it, looking at their flow of funds, doing the analysis. And after all of that, like Allison said, we come up with a potential list of states where you're going to need a money transmitter license, right? Um, Allison, can you kind of talk about, I know we talked about the bank account. Maybe can you talk about some of the other things that are really issues or holdups in getting a license, like audited financials and fingerprint, all that
The
stuff? Yeah,
audited
please.
financials could potentially be a pretty big issue because finding accountants or CPAs who are willing to work with fintechs are that can be challenging. Finding accountants who understand stablecoins, or if you're not using a stablecoin, whatever current cryptocurrency you're using, that can be challenging. And then it's it is it is a little intrusive with the personal information that's asked. And that's if you look at it from the perspective of the regulator, they need to understand who is in control of a company, who is in control of their state's residents' money, because we have had some pretty big um, issues with the industry and people losing funds. And so that's where the states have stepped in, and they have varying levels of scrutiny, with New York being the highest. California's got a new law that is going to go into in about a month. It'll be in place, and so that might end up being the same level of scrutiny, but if it's going to be pretty close. But the idea that like New York will dig into your each control person's personal history. And each state will do this, but New York will do a little deeper level. And then they're also going to look to make sure that the compliance system is working the way that you say it is. They're going to look to understand the financial systems to make sure they are, you can't just put it on paper. You have to show them. And that's some of the big differences. So for, as Josh was talking about, the tier one, the easier states, if you will, it's is everything on paper doesn't make sense. They're going to audit the companies in a year or 2 years to make sure it does. But for the initial licensure process, it's make sure it's well thought out, well formulated, well presented. And then for the more challenging states, it is make sure it's well thought out, well presented, and well, you can show your work and you can go through and walk somebody through an onboarding a client.
Excellent. Thank you so much, Allison. So I didn't realize we're somehow flying by in time. Um, so here, Jose, I don't want to take up too much more time on the US side, but we've kind of covered, where things start from our perspective and also from the client's perspective, and how we move the ball forward in terms of how we analyze licensure and regulations here in the US as it relates to the movement or custody of fiat and crypto. So, Jose, I'll leave the floor to you. Talk about Europe, UK, and how you process things there.
Yeah, of course. So you've covered the US picture, and let me take you across the Atlantic because obviously Europe looks more different than most founders can basically expect. So, a quick word of where I'm coming from. I've told this at the beginning, but I'm a Portuguese qualified lawyer. But I learned most of this from, from the operator side. So I've been a general counsel, being a head of legal and senior legal roles inside fintech and crypto companies. So I've lived, the licensing strategy, the banking pressure, the product deadlines that don't move. And what I'm about to giving you here isn't the law school version of Europe, is basically the operating version. And the headline is this. So Europe is no longer the afterthought market. For a lot of regulated crypto and fintech models, is now basically the first place where the licensing path is somehow clearer than the US path. And I'm going to explain this. So here's how it actually goes wrong. And it's almost always the same shape, basically. So a founder come to us and, product design, token already described publicly, a yield feature basically promised to users. And then we ask about the banking plan, and it's somehow vague. So a few months later, they are getting turned down, basically bank after bank, and we don't understand why, right? But the answer is the structure was basically never built to be bankable. So if you take one sentence from us today is basically build the structure before the launch and make the product bankable before you try to make it viral. And regarding the market, we can state three facts. The commercial fact is Europe is a 450 million person market with a single passporting logic. So authorize once, operate across all of it. And the legal fact is MiCA, markets in crypto assets. The strategic fact, the one that basically decides whether you make it. So sequencing. And it's moving fast. So a couple of years ago, most crypto firms in Europe basically operated on light national registration. So you had the old VSP regime, the virtual asset service provider registration under the anti-money laundering rules. And MiCA has now replaced that with a full authorization, which is the crypto asset service provider license. And serious operators are basically converting out of those old VSPs registration into proper crypto asset service provider authorization as we speak. So the early clean ones get the banking, the institutional clients get basically the trust. And the latecomers fight over the scraps. So it helps to understand why Europe feels different in that department. In the US, regulation largely happens by enforcement. So the rules emerge after the fact through cases, and the culture is obviously, as we know, move fast, find the line. But Europe is the mirror image, so the rules are written down in advance, and it has its cost, of course, and the same across the block. So the line I come back to is in the US, you have forgiveness, you ask for forgiveness, in Europe, you ask for permission. And this sounds like friction, but you can flip it. So permission means certainty. And once you authorize, you know what you can do across 27 countries in European Union. And so does your bank, and so does your investors, and whoever eventually buys you, basically. Now, the part most US founders skip past. When a founder comes to us, it usually boils down to two questions. Do I need an EMI license? And do I have to comply with MiCA? And the honest answer is that those are basically European questions with no clean US equivalent, which is exactly why people get confused. So in the US, you ask it activity by activity. Am I a money transmitter in this state? Am I an MSB federally? Is this token a security? So it's a patchwork, and you assemble coverage piece by piece. In Europe, it's basically cleaner in that sense, but it forces a decision up front because there are really two perimeters that we are discussing here. If you're holding customer funds and moving money, you have wallets, balances, you have cards, you have fiat on ramps, and that's the payments perimeter. And that's the EMI license, the electronic money institution. If you're dealing, on the other hand, with in crypto assets, you have the exchange, custody, issuing a token. That's the MiCA perimeter. And that's the crypto asset service provider. And most ambitious crypto products touch both, which means the real answer is usually yes to both. And the question is sequencing. And I think that's where the second mistake comes in. And I see it constantly in my activities. So a founder tells me, in confidence, we are a crypto company, not a payments company. And then we look at the product. They issue wallets, they hold customer balances, they move funds, they want cards, fiat on ramps, and a stablecoin later, of course. And that's not just a crypto roadmap. In Europe, that's basically a payments roadmap. So you're already in it. You haven't just named it or labeled it. And I once sat with a team certain that payments regulation wasn't their problem. And we went through what the product actually did line by line, where the money sits, who can touch it, who can secure it, how it moves. And by the end of it was obvious that they have been running a payments business for months without the license it needs, with a launch date already set, of course. And nobody had live actually. They just described themselves as, basically one thing while building another. And the regulator only ever reads, the activity. They don't read the label or the stamp, and that's why the EMI license, the electronic money institution license, matters more than founders think. It's the European license that lets you hold customer funds and run a regulated money business. So safeguarding of client funds, conduct rules, financial crime controls. And for instance, for stablecoins, it's basically what lets you issue the instrument at all. So in Europe, a euro or a dollar pegged stablecoin is basically an e-money token. And that can only be issued by a bank or an EMI. There's no basically stablecoin license. So if there's a stablecoin on your roadmap, the EMI isn't a side quest. It's basically the prerequisite. And Circle, for instance, worked this out. So they got an EMI in France before issuing their own Eurocoin, basically. And one thing I have to correct almost, every week, and we were discussing this, Joshua. Europe is not one market. The UK left the European Union, and that's not a technicality. It's basically a separate decision. And MiCA, we know that doesn't apply in the UK, and an EU authorization gives you no passport into the UK, and the UK one gives you nothing in the European Union. We all know that. But Britain runs its own show through the FCA, its own crypto asset registration, its own e-money licensing, and a UK crypto framework that's still being built out on a different track from MiCA. So if your plan is launch in Europe, the first question back is, do you mean the European Union, the UK, or both? Because that's two authorizations, it's two regulators, two timelines, and basically founders who assume one covers the other lose months finding out it doesn't actually. So one more planning point, and I'll keep it short, I promise. Europe is consolidating into a unified anti-money laundering architecture. And only a MiCA authorized firm sits inside that perimeter. So basically, your compliance stack has to be designed with your licensing stack. So you have KYC, beneficial ownership, monitoring, the travel rule, governance, etc. So not paperwork, basically, that you assemble the week the bank asks. Treat it as an afterthought, and it shows, and the bank notices first, of course. The same trap shows up on the token side, which is where I've had some of the hardest conversations throughout my career, of course. So when you join a Web3 company launching a token, the legal work is basically meant to be tidy. So you have the white paper, the tokenomics, the preparation for the token generation event, and usually the founder has it, mapped, beautifully mapped. But every so often you have to be basically the butcher as a lawyer, and you don't want to be the butcher because what you're looking at as walk straight across a regulatory minefield, just waiting for someone to step on it. You have the SEC in the US and you have the national regulators and supervisors in Europe. So you know the fault line. It's utility token versus security token. And the security side is the one that makes people run basically for the hills. And sometimes, obviously, a few patches would almost get it there, but you know it that it doesn't survive. So you tell the founder the thing nobody wants to hear, which is this token as design belongs in the trash, in the bin. And that's brutal, we know, because it isn't just legal. It can mean changing the whole product, the marketing, the essence of what they build. So, and I've been there and I've done that. So the lesson is do the token work early because the alternative is realizing far too late that the thing that you poured years into effort needs a license that changes what you were even trying to offer, basically. And now the example that pulls it together is stablecoins. So Europe has this, constraint. The stablecoin itself cannot be the yield product. And that matters because most founders don't actually want a stablecoin. So they want the distribution, they want the float economics, they want the payments, they want the revenue, they want the treasury yield, they want the retention. And the stablecoin is basically the surface, and the business model is what's beneath that. So it's underneath that. So Europe forces you to pull those apart early before you've built your whole identity around something that can survive, obviously, a regulator. So a clean e-money token is, in fact, a payment instrument. And on top of that, we can see now today, for instance, in Portugal, Bizan Bank just launched the first stablecoin issued by a Portuguese bank. You have a euro token and a dollar token with MiCA money framework, fully backed, reserve segregated, everything in place. So a regulated bank issuing a regulated digital euro and dollar. 5 years ago, you thought of this as science fiction, but today it is a live and regulated product. And that's the maturity curve I think Europe is on. And the point is that the trust is built into the structure. So basically, where's the yield fault line? So the moment yield enters the design, the regulator stops looking at the token and basically starts looking at the whole picture, the whole arrangement. And I guess this is the current state of the token and the stable coins at the moment. And for the American people, of course, that's essential. The Howey test arriving from the European side. And good news, actually. So, one design discipline protects you on both sides of the Atlantic. So, discipline is separation. Clean stablecoin as the rail, the yield generated in a separate layer on top. So it only holds as long as you position it as an investment exposure. Market it as stable savings yield for everyone, for instance, and you can you can trip the wire. And before I hand back, because I'm talking too much, one example that basically captures how Europe thinks better than anything else I could say. So I've seen, for instance, a regulator requiring a company's directors personally to complete formal anti-money laundering certification. So was not the compliance team, but the actual directors. And it is not something that you could defer. It was a hard, non-negotiable condition from the regulator with the standing of the authorization depending on it. So a US founder hears that and thinks, well, that's exactly the minutia I came here to avoid, right? But read it on the other way. Those minutiae are basically the salt of credibility in Europe. The requirement exists because the license is supposed to mean something. The regulator making sure people at the top understand they've put their name to. So basically building credibility. And that's why European authorization is worth having. Not everyone will clear that bar, and obviously the system makes sure of it. So Europe's message is pretty simple. You're welcome here, come and build, but you play by the rules. Because obviously credibility builds trust, and trust is naturally the whole moat. And the minutia is not the obstacle, it's exactly the point. So to leave you with this as final remarks. So Europe isn't the obstacle course that US founders can imagine. So it's a 450 million person single market that's become more predictable and not less predictable. And the serious operators in the market are already moving in while the field is still wide open. And the bridge between the two continents, the two regions is buildable, of course. I've built it from the inside more than once, and you just build it before you launch. That's my advice for US companies, US founders that intend to expand to Europe, and obviously that want our assistance in pursuing that, of course.
Jose, that was one of the best explanations I've ever heard on the licensing structure and best pass forward for Europe and UK. Thank you so much. I mean, you even cleared some things up for me, which is fantastic. So, very happy we worked together. One of the things that you mentioned, which is almost completely identical here in the US is, founders will come to us and they'll share their business plan and their flow of funds. And you called it that labeling, right? How they define themselves, right? But the regulators don't look at the definition. They don't look at the label, they look at the activity. Right. So coming to someone like Jose or myself and Allison ahead of time and working through what are you actually? Not what you call yourselves, but what the activity you're doing defines you as, what boxes you fit in, right? Will you be an EMI? Will you need Mika? Likely, yes, based on the types of clients that we work with, both internationally and here in the US. And will you be a money service business? Will you be a money transmitter? These are all things that you need to figure out early on as you structure your business. So, fantastic job, man. And Allison as well, covering the US side. I think we only have like 10 minutes left, which is amazing. We somehow time flew by. Raphael, do we have any questions from the audience? I know we have some questions for that we've put together ourselves, but let's see.
Looks like we do have a couple questions.
Okay, great. Let's see here.
So one of them for a company operating in both the US and Europe, where do regulatory conflicts tend to show up first? I think Jose kind of hit a couple of those right off the bat.
Yeah, pretty much.
But I
Yeah.
think really it's the
Go ahead.
education piece that I don't think there's as much of a conflict with what the goals are, at both in the US and the EU and the UK. So I did three places. It's clarity. The regulators want clarity. They want to protect their citizens, their residents. But
Exactly.
from the business perspective, it's sometimes asking questions going into why do the directors have to know that AML KYC has to happen? You know, those questions, I think that's where guidance can be appreciated. And you all please jump in with the that one. There.
Okay, so do I need to step in?
Yeah, go please.
Oh yeah, of course. When I was talking about this, particular example that happened to me, I guess it basically showed how in Europe, Europe obviously it's perceived as, this, bureaucratic place that is basically stopping every business, from the US into expanding here. But it is not actually. So Europe at the moment, I think with the AML and CFT legislation, and they are basically trying to right now in European Union to incorporate all of those pieces of legislation into one, which is the essence of Europe. I think is basically having one piece of legislation that can cover a lot of separate and different pieces altogether to make it easier for businesses to come here and to comply by the rules and still thriving their businesses, of course. But one thing that we cannot abdicate is obviously transparency on one side, and that's why I put up the example of the that AML CFT compliance certificate that was required for the directors of a Portuguese company. They were foreign directors, but still the Portuguese regulator demanded that certificate, in order to prove that they were not only here in Portugal, only on the paper, that they were actually, trying to build something here in Portugal. And I'm giving obviously Portugal as an example. They were actually trying to build something here, and for the sake of transparency and for the sake of the trust from the customers and the users, I think that's essential because as I was mentioning at the beginning, I think that within the fintech, crypto, and blockchain space, even though there's a lot of creativity, there's a lot of innovation, you still need to have these obviously these rules, and you see a lot of businesses that are somehow shady businesses, and obviously even for legitimate businesses that intend to provide real customers real services to real customers, even for those they want to be in a space in a market that gives them that trust, that confidence. And I think in my perspective, in my view, the regulator in Europe is not being overprotective, in each jurisdiction, but mostly they are simply trying to, basically comply, to demand compliance, of course, for businesses, and to actually deliver that trust. Because here you can have this, obviously, this safe space, as in the US, of course. And so I think the key perspective here is the AML, counter finance terrorism legislation in Europe is something that can actually be a shield for companies and can actually be a safe space. It can actually build that safe space for real businesses with real customers, real activity to build here, of course.
Yeah, Jose, I think you hit the nail on the head, and we see a lot of US companies doing this in Europe where they're getting the licenses, which also gives them that reputation, trust, both with the regulators and also with their customers as well. So
Right.
it does build a shield, which I completely agree with. We just have room for a couple more questions. Something that came up a lot on this webinar is bank accounts. So we have a question. Is it still possible for crypto companies to get a bank account today? And what does that process look like? So yes, 100%. Jose, maybe you could talk about it, how you guys handle it, in Europe. But we can, Allison and I can chime in from the US side. So you want to get all your ducks in a row, right, before we make an introduction to the financial institution. So what does that mean? Having a business plan that actually makes sense, A. B, having your flow of funds written out and have it actually make sense. Because if it doesn't make sense to you, it doesn't make sense to me. It's definitely not going to make sense to a financial institution, right? So imagine, Jose, Allison, and I are looking at flow of funds documents almost every single day. Banks don't do that almost every single day. So if we don't get it, they're definitely not going to get it, right? Outside of that, you need to have your AML KYC docs put together. So if we make an introduction to a bank and your docs look just thrown together, not professional. We have our own documents, obviously, that we've built over the last 10 years. So we have our way of doing things, and I know Jose does as well. But we would not make an introduction to an institution that we've been working with for quite some time unless we had these documents prepared. Outside of that, having the ownership structure clear, who the UBOs are, who the CEO is, having him prepared to be able to get on a call with us in the institution if necessary. That doesn't always happen, but sometimes it does, because you're really building a relationship with the bank, right? This isn't send an email, get an application approved, and moved on. We're going to have lots of conversations with the FI for weeks, months, and then ongoing thereafter, especially if there's API integration and more. So, yeah, just wanted to mention from the US side, but Jose, please jump in.
Yeah, and you mentioned it very, you know, all it's all right, essentially. So obviously, the process of getting a bank account and basically to present your case basically to a bank, you need to be aware that you're be presenting a case to, a financial institution, to a high regulated institution. So obviously their standards are, obviously at this high level. And obviously the prep work that you need to do in order to be perceived as credible, in order to basically to provide that credibility to a high regulated business, you need to be at their game, so to speak. And so that's why, during my presentation, and as you discussed, Joshua, I think it's, very important to have this preemptive work. As I mentioned, knowing your product first, obviously, then start building it with, legal, with you, with legal and regulatory alongside you all the time, because I think, for the future, legal strategy and product, and also obviously engineering, if you have those, yeah, exactly, need to be combined together. And it's not the point that you're going to build a product, right? And then you call the lawyer to be simply, a law firm. And we have seen this, for some years, in which basically within the crypto space, when applying, for instance, in the old regime for a VSP, you saw some law firms, doing only the work, which is basically submitting paperwork. And it's not only that, it's not only the job of a boutique firm. The job of a boutique firm is to be with the client, assisting them from scratch, helping them building the product in order to deliver it to, the regulator and, for instance, as you mentioned, to the financial institution. For instance, to open a bank account, which is, could be perceived as a simple act, but in fact, it says a lot about your business, right? And so my advice is always, obviously, drafting your business plan alongside with your counsel. Drafting the policies alongside with product, alongside with senior leadership, the executives, of course. And so you need to deliver all this because when you face the regulator, when you face the financial institutions that you're going to deal with, you need to be at their level of credibility and reputation. And of course, that will not only require, some, regular follow-up, but, something from scratch, something from beginning, establishing and defining the strategy from the beginning, I think, is the essence for any business to be alongside with the companies that intend to pursue a license or to be regulated, of course.
Couldn't agree more. Thank you so much, Jose. Thank you, Allison. Thank you, Raphael. We have officially finished the webinar. I know there's more questions that we couldn't get to. Of course, my team will be reaching out to everyone who had additional questions. We could set up a one-on-one call or, talk about them in a separate email or whatnot. So any questions that were not answered, we will get them answered. Do not worry. Again, I'd like to thank Allison and Jose for joining me today. I think this was really, really informative. And even I learned some things, which is always great. Every day is a learning experience. So thank you all. And if anyone has any questions, of course, my team will be reaching out and communicating with you. And feel free to also contact myself, Jose, Allison. All of our emails are up on our website. But if you can't find those, info@cogentlaw.com, and my team will get you in touch with us ASAP. So thank you all. Have a wonderful day and talk soon.
Thank you. Bye bye. Have a wonderful day.